Hey everyone, and welcome. So, let's talk about something incredibly frustrating. You know when you find that perfect textbook trade setup? Everything looks amazing. You take the trade, and then it just completely falls apart. It's enough to make you want to throw your computer out the window. Well, today we're going to dig into exactly why that happens. And I'll give you a hint. It's not what you think. This is the question, right? It's the one that keeps so many traders up at night. You do your homework, you spot a pattern you've seen 100 times, you feel that rush of confidence, and then boom, the market rips in the other direction. You're just left there staring at the screen thinking, what on earth did I miss? And here it is. This is the big secret. What if I told you the problem isn't your strategy? That bullish flag, that head and shoulders, that indicator crossover, it's probably fine. The real issue, the one that separates the pros from the rest, is that every single setup only works in a very specific market environment. You're basically using the right tool, but at the totally wrong time. And get this one single mistake, trading a good pattern in the wrong context, is the real reason a staggering 90% of traders lose money. It's that simple and that profound. But the good news is, by the time we're done here, you're going to have the exact framework to fix it. You see, most traders are, for all intents and purposes, trading blind. They're so zoomed in, so focused on the tiny little details of their entry pattern, that they completely miss the bigger picture. It's kind of like using a powerful microscope to find the perfect blade of grass to stand on, without ever bothering to check the weather forecast and see that a hurricane is just 5 minutes away. So, first things first, we have to completely redefine what a setup even is. A setup is not just your entry signal. A true professional level setup has three parts, and they must happen in this exact order. First comes context, then you need confirmation, and only then, at the very end, do you look for an entry. And this right here just lays it all out, doesn't it? The amateur sees a pattern and their brain screams, "Go!" It's all impulse. But the professional, they see that same exact pattern and it just starts a process. Their first question is, okay, does the bigger picture agree with this? Then, is this move showing signs of strength? And if, and only if, the answer to both of those is a clear yes, do they even start thinking about where to get in? This, you need to write this down, tape it to your monitor. This has to become your number one unbreakable rule. The higher time frame is like the bouncer at a nightclub. If it doesn't open the velvet rope and let you in, you don't trade, you just wait. No exceptions. I mean it. Okay, so that's the problem. How do we fix it? How do we put this all into practice? Well, we use a simple but ridiculously powerful framework. It's called the 3-time-frame system. And this is how you're going to stop trading blind and start seeing the market with total clarity. Here's how it works. You've got 3 jobs, 3 questions. Your highest time frame, let's say a 4-hour chart, tells you the why. Why should I even be looking for a trade right now? It sets the scene. It gives you the context. Then your middle time frame, maybe the 30-minute, answers. Should I? Should I actually trade this move? It confirms the health of the trend. And finally, your tiny little entry time frame, like the 5-minute, its only job is to tell you how. How and where do I execute? That's it. All right, theory is great, but let's make this real. We're going to walk through a trade piece by piece to see exactly how this works in the wild. This is where it's all going to click. We'll start big and drill all the way down to the entry. Okay, step 1, the 4-hour chart, the why. So the market's been stuck in this boring sideways grind for ages, and then boom, look at that. A massive clean candle breaks out and closes way above that old range. This isn't some weak, hesitant move. This is pure intention. This is momentum. This tells us the big money has spoken. The door's officially open for longs. That's our context. So the door's open. Now we drop down to the 30-minute chart to answer, Should I? We need to confirm this new trend is actually strong. And look here. Price is pulling back, sure, but it's holding beautifully above key moving averages. It's a shallow pullback. Just a little breather. Not a deep, scary reversal. The whole structure just looks clean and healthy. So yes, the answer is yes. We should be looking to trade this. Context is now confirmed. And only now. I mean, only after the 4-hour and the 30-minute have both given us a massive green light, do we even think about getting in. We zoom into the 5-minute chart to find our how, and we don't just blindly buy, we wait. We patiently wait for a clear little pattern to form, like this perfect little bull flag. And when price breaks out of that flag, that's our signal. That's the trigger. We're not guessing, we're executing with permission from the higher time frames. If you want to actually master price action from the ground up, my course walks you through the entire approach, step by step. The link is in the description and in the pinned comment below. You know, using this system isn't just about reading charts differently. It's bigger than that. It forces a complete shift in your mindset. You have to go from being a market predictor, someone who's always trying to guess what's next, to being a market reactor, someone who patiently waits for the market to reveal its hand first. I want you to let this one really sink in. Think about all those losses, all that frustration. It wasn't because you had a bad strategy. It's because you were using it at the wrong time. Your timing was off. That's it. And when you make the shift, when you start waiting for the right timing, the changes, well, it's incredible. Your win rate just naturally climbs because you're only taking the easy, high probability trades. Your drawdowns get crushed because you're sitting out all that choppy, random noise. And your confidence, it goes through the roof because for the first time, you feel like you're in sync with the market, not fighting it. It really all boils down to this simple truth. Amateurs think trading is about being smart and out-predicting everyone else. But professionals? They know success has almost nothing to do with prediction. It has everything to do with the discipline to just sit there and wait for the perfect moment to present itself. You have to drill this into your head. A non-trade is a winning trade. Every single time the context isn't right and you follow your rules and you don't click the button, you won. You successfully did your number one job as a trader, which is to protect your capital. All right, so how do you put this into motion right now today? Let's take everything we've talked about and boil it down into a super simple, step-by-step action plan that you can use on your very next trade. It's just 4 steps. 1. Go to your high time frame. Define the context. Is the door open or closed? 2. Go to your mid time frame. Confirm the trend. Is it healthy or is it weak? 3. If, and only if, you get a yes on both of those, you go to your low time frame and you execute your entry. And step 4, maybe the most important of all, you ignore everything else. If the context and confirmation aren't there, you do nothing. You walk away. So I'll just leave you with this one last question to think about. Go back and look at your last 10 trades and be honest with yourself. Were you trying to predict what was going to happen? Were you jumping in on an impulse? Or were you patiently waiting for the market to line up and give you permission first? The answer to that question, well, it tells you everything. So let's wrap it up. Most traders fail, not because they're dumb, not because markets are impossible, but because they treat every candle like a potential setup. They ignore context, they skip confirmation, they rush entries, and then they blame psychology. But trading isn't emotional. Trading is structural. If the structure is wrong, the trade is wrong. If you want more detailed breakdowns, more full setups, and if you want to learn my exact framework, make sure to like this video, subscribe, and check the links in the description for my private community and full trading course. Trade smart, stay patient, and I'll see you in the next video.